Every year, high-income earners pour more and more of their hard-earned money into the IRS funnel. And Uncle Sam, he never says thank you. But the game has two sets of rules, one for the masses and one for those who know where to look. Truly wealthy don't avoid taxes, they reposition their income legally, strategically, and permanently. How? By leveraging the very tax codes Congress wrote to protect certain classes of capital. Let's look at three powerful sections of the Internal Revenue Code you probably never heard of or even know exists. Section 72E. It allows your money to grow tax deferred. No annual tax bill, no capital gains headaches, just uninterrupted compound growth. Now, Section 7702. It defines how specific IRS compliant contracts can accumulate value and even grow safely, right? When the markets drop without ever being taxed as income. So, Section 101A, this is the holy grail. This section allows for the entire transfer of capital income tax-free to your heirs or your trust. And if structured correctly, it can even allow you to access that value tax-free while you're alive. That's the big one. This isn't a loophole. It's not a progressive tax planning. It's the rule book. The one most CPAs won't bring up, but every family office quietly uses. Think about this. Your 401, tax deferred, right? But fully taxable coming out. Your brokerage accounts, taxed on gains, taxed on dividends, taxed again when you rebalance, on and on. But there is a strategy that changes the total equation. By repositioning just a portion of your existing income into a tax advantage contract, you shift from being taxed forever to accessing income never taxed again. No contribution limits, no income restrictions, no required minimum distributions, and unlike retirement accounts, you're not playing by someone else's timeline. Your capital grows in a private, creditor-protected environment with tax-free access when structured correctly. This is how CEOs replace their pensions, how business owners shelter their retained earnings, how high-income professionals build tax-free retirement without relying on Wall Street. So, if you're earning 250, 500K, a million per year, and you're still trying to save through traditional taxable tools, you're not just leaving money on the table, you're tipping the dealer. It's time to reposition, to shield, and to leverage, because building wealth isn't just about how much you make, right? It's about how much you keep and how silently it compounds when Uncle Sam isn't invited to the party. Ask your advisor how to reposition your income using IRS-approved strategies backed by Section 72E, 7702, and 101A. Or just ask me. I'm fully licensed in most states across the country, and I'll show you how to set these up and how the top 1% build tax-free wealth without loopholes, just better guidance. Talk to you soon.